Hey everybody, welcome to Mortgage Today for Wednesday, July 10th, 2024. And oh, what a day it was. UMBS opened the day up 3 basis points. Stock futures were up 14 and a quarter points. Stock futures were pointed towards a longer advance for the S&P 500 as investors sought vindication from Federal Reserve Chair Jerome Powell for bets on monetary easing. Contracts on the S&P 500 futures rose 0.3%, while those on the NASDAQ 100 added 0.4%. Treasuries advanced with yields on 2-year treasuries near a 3-month low. Jerome Powell gave his semiannual Humphrey-Hawkins testimony yesterday. Here are his prepared remarks. If you want to see that, check it out on our blog. The subject of the rate cuts, he said, is the committee has stated that we do not expect it to be appropriate to reduce the target range for the Fed funds rate until we have gained greater confidence that inflation is moving sustainably towards 2%. Incoming data for the first quarter of this year do not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress. The more good data would strengthen our confidence that inflation is moving towards its 2%. Powell did mention that the economic risks are no longer unbalanced between inflation and growth. The labor market is back at pre-pandemic levels, and we are continuing to see wage growth slow. The blip in inflation in quarter one looks to be over, and the September Fed Fund futures moved slightly more dovish with a 75% chance of a rate cut. The July futures still see very little chance of policy change. The 10-year bond fell a couple of basis points, but overall the markets didn't move much. We also got news that the Biden administration is looking to ease the requirements for title insurance for some low-risk refinancing. While title insurance is a requirement for Fannie and Freddie mortgages, it is looking to ease the requirement for some borrowers, which could save hundreds of dollars on closing costs. We've officially run out of ways to characterize the boring sideways grind in the bond market that's been intact since last Friday afternoon, maybe even a little bit before that. One would think that the Fed chair testimony and the Treasury auction cycle that we'd at least have moderate volatility, but alas. Perhaps the market is saving it all for Thursday's CPI. For those that have to know what happened today, there was a 10-year Treasury auction. It was well received, but not stellar enough to inspire any new buying. Fed Chair Powell reiterated the same messages as yesterday, and markets cared even less. As always, CPI means rates could go either way, but either way will probably be in a big way. UMBS ended the day up 2 basis points at 100.71. When we look at the charts, the 100.71 is right in the middle of this kind of narrowing range. We got a new Fibonacci line there at 100.28, which has been kind of a pivot point going back into June, and that 100.911 has been tested like once, and it bounced right off of that. In terms of things you can help out, is definitely check out our sponsor at wellthatmakesense.com. This is a blog from our series called Yeah But. In this world, there are no solutions, only trade-offs. And the one we have today definitely speaks to a lot of people. It's too many people are moving here. Is that a good thing? Is that a bad thing? Let's talk about it on wellthatmakesense.com.